And so, to our first session, let's crack on. This is our opening fireside chat. We're joined by Jackie Kingham, Director, Business Transformation at Raisin, and we're talking fintech compliance, balancing innovation with regulation. A warm welcome for Jackie, please. Okay, and I think that's probably the shortest introduction I've ever done, so let us move on. So Jackie, welcome. Thank you for joining us.
Thank you.
Let's do a little bit of background first for you, journey. Share us your journey from more traditional banking to the fintech space. What inspired that? How was that for you?
Yeah, sure. So thanks for having me here. So my journey I actually started off as a management consultant. So worked at KPMG and EY, mostly in the regulatory change space. And then as things happen when you're a management consultant, I just found myself dropped into the treasury space. And then once you get on one treasury project, they try to get you on all the other treasury projects. So that's sort of where I found my specialism. Did that for a few years and decided that I wanted to move into a bank working in the treasury department so I could learn kind of how to do the treasury. So that's where I spent the last 9 and a bit years of my career. So I worked at Deutsche Bank, Global Investment Bank. I had various different roles in the group treasury function, liquidity management, balance sheet management, and worked on a lot of regulatory change projects. My most recent role at Deutsche Bank, I moved into the corporate bank space where I was the chief operating officer for one of the sales businesses, so selling markets products to corporate bank clients. And that, again, involves a lot of sort of like regulatory change when you're dealing with, you know, MiFID II classification of clients, what you can and can't sell in terms of structured derivatives. So that's sort of my background. I was always interested in the fintech space. And, you know, I had a really great career at DB and I was progressing really well, but I felt like all the action and all the fun stuff was happening in fintech. I was sat in like forensic investigations kind of going through 5 years ago, what email did someone send to figure out, you know, where something might have gone wrong in a trade. Whereas I had like colleagues and friends and, you know, people who I followed on LinkedIn who were kind of really developing new products that had never been seen before. And I thought, you know what, like I want to work on that. I want to find a way to work in that environment. So that's sort of how I moved into fintech and very happy to have found my role at Raisin.
Because I always like that story. I'm sure I could get every single one of you on this stage and ask you your story about how you got to where you are now. And I can pretty much guarantee every single one of you did not go into your high school careers office and say, I'd really like to do what I'm doing now. But we won't do that because that would take some time and would really mess up the agenda. But let's move on to the differences when it comes to regulation, particularly with what you're doing now. It's really been a key talking point about regulation, how it fits in, and the regulatory differences has been a key topic over the last 2 days. So for you, the key regulatory differences between working in a traditional bank and a fintech, because you've got the experience of both.
Yeah, so I mean, in my experience, the key difference I've noticed is the structure. So working at a big bank, you know, some of these banks are, you know, over 100 years old. They've got very rigid and well-developed frameworks. There's a playbook, and everybody is well-versed in the playbook. If you get an observation, if you get a finding, this is what this person does this, person B does this. Everybody is on the same page and you know what to do. When you're working in a fintech where, say, there's maybe only 20 people and you've never had a letter before or you've never had that sort of conversation with the regulator before, a lot of the time it's like, okay, you know, what should we do when you're sort of on the fly saying, this is what we need to do, this is how we need to respond, this is the sort of analysis that we need to do. So I think, you know, larger banks have the benefit of having decades of practice and structures that they've built on over years. Fintechs, because they're new organizations, you're sort of, you know, piecing it together as you go on. And another thing, you know, a bank, you have a banking license. You've had a banking license for years and years and years. A fintech, you might start off as, say, a payment service provider. Then you might move to an EMI. So it's what you're held to from a regulatory perspective changes as time goes on. At a bank, you don't have that problem because you've always got a banking license and that doesn't change. So it's, okay, well, what was relevant to me 2 years ago is not necessarily relevant. I have to now do more. And how do I navigate my whole organization and grow into that new regulatory framework that we have or that we're aspiring to have?
One thing I really should have gone into a little bit earlier on is just finding out a bit more about Raisin in your current role. Because what I find fascinating, as you were saying, is about how, the exciting change into a fintech, getting to work on, frankly, cool new things. Can you give us a little bit of background and the things there that really have excited you and sort of, helped to ignite your career from there?
Yeah, sure. So Raisin, if you haven't heard of it, it's like a deposits marketplace. So think of something like, Money Savings Expert, where you log in and you see, in the UK, we mostly focus on term deposits and easy access accounts. So you would log into your Raisin account by creating an account with Raisin. You automatically have a bank account. Then we work with a number of partner banks that we call deposit-taking banks, and they essentially post on the Raisin website what their term deposit rate is. And essentially the banks are competing with each other. They want to have the best rate on the platform, and you as a customer, if you're looking to place a term deposit, you obviously want the best rate and what works for you. So you can scroll and you can see, okay, Bank ABC is offering me 5.2% for 6 months, but Bank DEF is offering me 6%. Okay, well, I want to go with that bank. And by clicking on that offer from that bank, you will automatically set up with a bank account at that bank. At the end of your term, your money goes back into your Raisin account, and you might find another bank has a better rate. So you click on that link, you set an up account, you are automatically created a bank account with the next bank. So it saves you the hassle of having to go to 50 different bank websites to see who has the best rate. And it saves you the hassle of having to re-KYC and send all your documents each time you want to set up an account. It's done with the click of a button. So that's sort of what Raisin does. It's a German company, so the German platform is obviously a lot larger, much wider range of products, investment products, but that's essentially what the business is. In the UK, we're about 6 years old. Raisin acquired another company in the UK, definitely high growth, and we're definitely looking at how we can sort of expand and cater to the UK market.
Yeah, as much as I love filling in forms, that does sound like a very good idea. Let's move on to culture, because this was something that came up quite a lot yesterday. Anyone who was in here for the AI and fintech discussion, the difference in cultures between sort of the larger banking institutions and fintechs. But let's look at it from a compliance culture point of view. For you, how does that differ in fintechs compared to the larger financial institutions? Because again, you've got the view on both.
Yeah, so, I mean, to put it bluntly, and I don't know if there are many people here who work at big banks, but compliance is a cost. It's an expense to the business. If you work in compliance, you're not in a revenue generating department, you are a cost to the business. So as much as the bank absolutely wants to make sure that you're in line with regulations, you have a budget, and I guess there's not that much appetite to go over the budget. So you have to work within your means. I think fintech is in a really unique position where you're developing new products whilst you're trying to develop your compliance and governance framework. And I really see it as an opportunity to embed compliance into the products that you're offering. A lot of banks, again, products were created, FX, interest rate swaps. These are not new products. They were created, years and years and years ago. The product already exists, and then you have to develop the control framework around it. FinTech, you can embed that control framework. So I think there's a really unique opportunity. I mean, compliance is always going to be an additional cost to the business, but I really feel like, and this is what we do at Raisin as well, you can really embed it into your organization. So how are we offering a service to other banks? Not only are we giving them the opportunity to access different liquidity, it's taking the regulatory burden. We do the KYC for those banks, so they don't have to worry about ensuring that, they know who the customer is. We do all of that, so it makes it easier for the customer and it makes it easier for the bank. And I think there's so many more opportunities in other areas that fintechs can really capitalize on.
I know when I was writing my LinkedIn post about yesterday, which took ages, there were so many people to tag. I was there with a cup of coffee. It took me half an hour, but I'm over it now. It was fine. One of the key things I was talking about in that, and the key themes from yesterday, was a question of balance. And so whoever scheduled this chat this morning was absolutely spot on, because we are talking about balancing innovation with regulation. It's such a highly regulated sector, and yet fintechs are wanting to innovate, you're wanting to disrupt, you're wanting to come up with ideas. For you, how do you get that balance? That is the thrust of this conversation. How do you stay innovative? How do you come up with ideas? How do you disrupt? whilst fitting in with regulation from your experience?
Yeah, and that's a really good question. And, there's no single answer. I think, one thing is as your organization grows, it's making sure that you have the right people. So an example is, you might start off as a very small organization. You might have permissions to be a PSP, same payment service provider. You might have the aspiration to move to an EMI, to become an EMI or to have a banking license. Do you have people in your organization who have gone through that journey or who have worked in an organization that has a banking license, so they know what it takes to get you to that stage? So I think it's one, having like the right people, the right expertise, and having a plan as well. Like, whilst I fully appreciate that, there's a lot of fluidity, and that is the brilliance of fintech, also having an idea, like, do you want to go down that route? And if you do want to go down that route, maybe there are a few things that you need to do now if you want to hit that target in 5 years' time. So having a plan on, okay, aspirationally, this is where I want to get to. One example of balancing innovation with regulation, you're always thinking about the future. What's the next product? What's the next market we want to enter into? What's the next big thing that we want to do? If I take the example again of, say, moving from a PSP to becoming an EMI or a bank, you forward plan and you think, okay, these are the new products that we want to launch. But as you move into that next stage of your regulatory journey, the customers that you onboarded 5 years ago when you were a PSP or an ASPSP, and the due diligence that you carried out, does that still work? Is that still relevant? Do you need to maybe revisit what you did 5 years ago? Because maybe at the time that was all right, in line with the permissions that you had. But now that you're a bank or you're trying to become a bank, does that still make sense? Do you have a risk now in your historic portfolio that you need to address? So I think there's a lot of focus on the forward planning, and that's great, but I think you need to have a few people in the organization who can say, okay, well, what we did 5 years ago, do we need to revisit that, and does that still make sense? And I think that's the key balance that people forget about sometimes.
One thing I'm fascinated about, Jackie, is so you've gone from the more traditional banking environment and gone to a more to the fintech environment here. For you personally, what were the challenges in adapting to that different regulatory environment? From my perspective, it's probably like trying to swap between rugby union and rugby league. It's sort of the same game, but there's subtle rule changes. Is that a fair?
Yeah, I mean, it was an interesting journey. I came from a bank that, as a lot of people would know, was in the news quite a lot. There were, and a lot of big banks, they're used to getting fines, getting observations, getting letters, getting findings. So for me, when you receive something from the regulator, you're like, oh, okay, fine, not great, but this is what we need to do. When you move to a fintech organization, I suppose you're not used to the regulator telling you, okay, you've really messed up and you need to change this. It's a really big deal. And sometimes people can panic, or sometimes people don't know what to do if you haven't been in that situation. You don't know when this is okay, we've really messed up, versus, okay, that's fine, they've flagged something that we need to work on, we can address it. So I think it's, one, having the experience and learning how to deal with those situations, and that touches on what I mentioned before. Do you have the right people in the organization? And sometimes, and it's a harsh reality, the people who you started with and built the organization, do they have the skills to do what you want to do in 5 years' time? And do you need to bring in other people to supplement that skill set with that experience? The other piece as well is bringing people on that journey. I've mentioned a few times now about how you change your regulatory permissions and how you kind of increase over time. Again, at a bank, you don't have that problem because you've got a banking license. There's nowhere else to go to from there. But do the other people working in the organization, in your customer services team, in your finance team, in your product team, do they realize that you've increased your permissions? So when you were asking for something a few weeks ago, and now all of a sudden when you ask for things and you need all these extra controls and extra elements, do they understand why you're asking for that? And do they understand the significance of changing the regulatory obligations that you have? And I think it's bringing people on those journey, not necessarily, you wouldn't expect everybody in the organization to know. And it's not a case of you send an email out to everyone or a Slack message, hey guys, as of tomorrow, we have these permissions, therefore we all need to do X, Y, Z. It's not always the case, and it's making sure that you can bring people on the journey, and you really have to rely on the people who've been through that before, who know how to, how to kind of carry everyone along with them.
Because that's where I wanted to take things next, really, because scaling is that's part of the challenge there. When you're wanting to grow, you're wanting to adapt. Is it just a people question? Is it a wider strategy question? How do you future-proof yourself to make sure you're regulatory compliant as you scale?
Yeah, it's a bit of both. I think definitely strategy. You kind of need to have an end goal, like what is it that you're aiming for? And appreciate as well, as a fintech, you can easily pivot. So you can launch a product, one that you thought was going to be amazing, and actually it tanks with the market because that's not really what people wanted. So being able to pivot, but I think just having that plan, like what are you aspiring to? And then, having the right people who can help you on that journey. And it might be different people and different skill sets at different times of your journey, but it's being able to take a step back and recognize what you need. And, it's not a personal thing. It's more, okay, I want to launch a new product, which is investment products. Do we have anyone in the organization who has ever worked in the investment industry? Yes or no? If you don't, okay, well, we should look to get an SME, whether it's a consultant, or get people who have done that, who have launched that product, who kind of know what it takes to run a successful business. And I think sometimes you see people, fintechs, great culture, people stay working at these organizations for a long time, but sometimes where people fail is they haven't recognized where they've needed to bring in outside expertise to kind of help them push them onto the next level.
I still have questions which are very much under the advice banner, but I do want to go to the room to see if there's any questions first. Anyone got any particular questions for Jackie before I push on? I wasn't sure if you were just adjusting your glasses there. I wasn't sure if that was an outrageous dummy you were throwing me.
Thank you. My question is regarding, being also a European company, what challenges do you see with DORA coming into the play beginning of next year?
That's an interesting question, and I'm actually on a panel about DORA tomorrow, so this is a good warm-up for that. So I think DORA is super interesting because in my experience, and if I take Raisin as an example, we have our product offering, but we rely on a lot of third-party companies and vendors. So Raisin in the UK, we don't have a banking license, we're a PSP, but we have a service bank, ClearBank. So when we offer you a bank account, it's actually ClearBank offering you a bank account, and we partner with them. So things like DORA, you need to think about, okay, well, what happens if ClearBank goes down? How do we still service our customers? Because that's beyond our control. Another area, a lot of companies will use external vendors for KYC, PEPs and sanction screening. What happens if your vendor has an outage and you can't screen for PEPs and sanctions for 1 or 2 days? Like, what are you going to do? You can't just stop your business. So I think fintechs in particular will be impacted because there is that reliance and sort of cross-partnership with different organizations. So you need to make sure that you sort of map out what all your vendors are, what are your critical services, and do you have a backup? Do you have a plan B? So I think that's something really critical and often something that gets forgotten because you have your, okay, I'll do my third-party due diligence, and yes, I'm happy with onboarding that vendor, but then, what happens if that vendor is not available? What happens if that vendor goes under? Because we took a punt on a new innovative company, and actually they've lost all their funding and they no longer operate. So I think that's a key challenge, and definitely a lot more work to do in that space with fintechs.
Thank you very much. Any more questions? No, I'll carry on then. Where I wanted to finish, really, as I said, was an advice, really, and that's your advice for any fintech startups or earlier on in their journeys who are trying to embed regulatory compliance from day one. Where do you start, and then what's the second step after that?
Yeah, I think events like this are great as well. Like being able to meet other people who are working in the same industry and kind of sharing, like, how are you tackling this issue? Because a lot of the issues, we're all facing the same issues. We're all sort of innovating new products. We're doing things that haven't been done before. We're not the only people experiencing this issue. So it's really great to kind of speak to other people and be like, hey, I have this issue when I'm doing PIPs and sanction screening. Like, what vendor are you using? How do you overcome that issue? And then you find out everyone has the same issue, and maybe you can come up with like an industry-wide sort of solution. So I think definitely networking, upskilling, training courses, and I think just being aware of how the regulatory environment is changing. So for example, in the UK, consumer duty is huge at the moment, and there's definitely a shift away from best outcome, so how are we going to develop a product where we can make the most money that we can, to how can we develop a product where the customer can get the most benefit that they can. Not necessarily at the expense of our business, but you have to prioritize the customer getting the most value rather than yourself. And just being aware of all those changes, what does that actually mean for your business and how you need to think about how you develop products. So kind of being a sponge, osmosis, and networking, speaking to as many people as you can, following people on LinkedIn, that's kind of the stuff that I do, and just trying to absorb.
And then finally, as in your role as Director of Business Transformation, I know in a lot of these events, a question I often get is how do you influence upwards within an organisation? Your role is very much driving the transformation. How do you go about personally trying to influence other people within the business to go along with the transformations you are working on? Sometimes when it's regulatory, I suppose it might be quite challenging, might need some big changes. How do you approach that personally?
Yeah, it's a really good question. And what I'll add to that is the difference between in a bank where you have a CEO appointed by the board and you've got shareholders versus a fintech where the CEO might be the founder and they have a very personal connection to the business. They have a strong view on where they want to head. But you have to remember, in my role as well, I've been brought in for my expertise and my experience. So you almost have to be able to influence them in a way that you understand why personally they might have a view or they may have some sort of emotional connection, but actually you need to lay out the options. This is option 1, this is option 2, this is option 3. These are the pros and cons for all of those options. You decide, but I'm telling you, I think on my experience, this is the best route to go down. However, I've laid all the options out, all the facts, so you can decide, how best you want to move your business forward, because it is very different. In a lot of these organizations, we are dealing with the person who started this from day dot, in their bedroom or the garage or whatever, versus, someone who's appointed by a board of 20 people.
Okay, well, Jackie, thank you very much indeed. It's been a fascinating look behind the scenes on how a lot of that works. And you're back with us later for the Women in FinTech panel, so we'll look forward to that. Thank you for Jackie, please.
Thank you.